There's another reason we don't like to start that live stream on YouTube too early. You never know what's going to be said.
Right. Mr. Willoughby.
Hi, we should be live out in YouTube world. Still having more people show up.
Everybody ready to go?
You've got a commissioner coming in, sir. And
Oh, Jerry.
yep,
Is he in?
he is.
Let's call the work session of the Isabella County Board of Commissioners to order. Stand for the pledge, please.
Oh, let me put the flags on. My apologies.
Flag's coming, folks. Right there.
There we are.
I pledge allegiance
To the flag of the United States of America,
to the republic for which it stands,
under God,
under God, indivisible, with liberty and justice for all.
Thank you, everyone. Madam Clerk, a roll call, please.
Commissioner Jelzinski,
Present.
Commissioner Horton,
Here.
Commissioner Marino,
Here.
Commissioner Swaney,
Here.
Commissioner Holt,
Here.
Commissioner Engler,
Here.
Commissioner Green.
Here.
All present, Mr. Chairman.
Thank you. Item number 3 on the agenda is approval of the agenda. This afternoon, we have 3 items underneath the presentations and special reports. Under appointments to boards and commissions, we have 3 people that are going to get appointed positions, different incumbents. Brings us down to committee reports, finance and administration.
Thank you, Mr. Chairman. First off, under section A8, energy audit discussion, we would like to have that removed, please.
Okie dokie, that'll be taken off. Criminal Justice and County Affairs Committee.
Criminal Justice and County Affairs Committee is all set, Mr. Chairman.
Thank you. Human Resource and Public Works Committee.
Human Resources and Public Works Committee is all set, Mr. Chair.
Thank you. Tobin, is there anything again this week underneath Isabella or Intergovernmental Affairs?
Not tonight, Mr. Chairman.
Thank you. Nicole, do you have anything on administrator controller issues?
No, sir.
Thank you. There's no unfinished business. Under new business, there's 5 items with the unions we have that when we get to, we'll explain them there. General public comment and announcements, and then we have a closed session at the final part of this that we'll get to. Motion to approve the agenda as amended is in order.
Motion by Horton.
Who is the support? It's been moved and supported to approve the agenda as amended. All in favor of the motion signify by saying aye.
Aye.
Opposed?
Aye.
Motion carried. Item number 4 is general public comment. Nicole, is there anybody that?
I just pulled up the non-video participants so we could take a look and see who those were. Other than what you see on the screen, there are no public joining in at this time.
Okay. At this present time, there's nobody in that wants to get into general public comment. So we will move on. Under presentations and special reports, item A is Scott Murtis from the Mid-Michigan College Vice President of Community Outreach and Advancement. Is Scott among us?
Yes, I am here, Mr. Chairman.
Oh, sorry about that, sir. Didn't see you. We're down to smaller sizes. I'm not a real Zoom guy, but Scott, start in, please. Your item number A. And
Okay. Can I share the screen, sir?
thank you.
Yes, you can.
Okay. So I'll try and keep this brief because I know you have many agenda items that you are working on. But MID is going to attempt a ballot measure in November of this year in an attempt to annex Isabella County and Gratiot Isabella RESD. It's been sort of a long time coming, and I think really just when you get down to it, annexation is really just an invitation to join our college community. Most people, I think, already assume that they are part of MID's college community because we've been operating in Mount Pleasant for a number of decades and other areas as well. But actually, residents of the Gratiot Isabella RESD are classified as out district, and that has tuition implications for them. Mr. Chairman, with your approval, I'd like to play a short video if that's okay. I don't know if, sometimes I have trouble with Zoom. I'm not the best at it either. But it's a video that explains sort of the process of annexation. May I do that?
Go ahead, sir.
Okay. We'll see if it plays. Can everybody hear that? Okay.
Yep. No video, no.
The audio is not really coming in.
You're right.
Yeah, we've lost it.
Yeah, your video's gone, sir.
Video and audio's gone. Okay, well, sometimes that
The
happens.
audio's gone, exactly. The video's there.
Well, I'll just kind of give, in order to save time, just to sort of a debrief of that.
Sounds good.
Essentially, what we're looking at here, Michigan is a type of state that does not have a centralized higher education authority. Each community college that currently is in existence is designed to service a very specific community, and that leaves fairly wide swaths of the state without any coverage area, like, for example, Isabella County and most of Gratiot County. Those are technically out district and are not covered by any, and there's many around the state. So in order to proctor and invite, your board or our board, excuse me, passed a resolution inviting the residents of the Gratiot Isabella RESD to at least be able to render a choice, yes or no, whether they want to join our district. And that measure will be in November. As part of that, we also received the state superintendent approval, and that was, it took a while and was quite an interesting journey, but we received it and we're excited, and the ballot will be on, or the proposal will be on the ballot in November. In terms of MID, and some of you may know some of this, some of you may be surprised. In 1920, MID serviced just over 4,700 students during that academic year. The diagram as it shows there, a majority of those students actually reside in Isabella and Gratiot counties. Those are two of our three. Number one is Isabella, number two is Clare, number three is Gratiot. So we have an established presence here. We've been here for a long time and have been serving students here for a long time. Maybe a bit more surprising, the economic impact that MID has on the area. These numbers come from a commission study that we had done this fall, $69.2 million in economic impact. And believe it or not, 1 out of every 43 jobs is at least partially supported by Mid-Michigan College. So we've been in this area, we have a presence in this area, and it's been long-standing. As I said, those numbers came from MC. MC stands for Economic Modeling. Economic Modeling and Survey International, something along that line, that we had commissioned in the fall. And there are several other interesting facts that came up as part of that study. First and foremost, the return on investment that students receive from their degree at MID is 18.3%. I think all of us would love to have 18.3% return on any of our investments. That, of course, beats the average 30-year average of the stock market, and certainly your garden variety savings account. And most of that, excuse me, comes from the increase in wages that students receive as part of earning an associate's degree, $8,200 more per year compared to those that receive a high school diploma. So certainly great benefits for the students, but also great benefits for the taxpayer. According to the MC study, for every $1 spent by taxpayers on higher ed, it returns $5.50 back to the community, which is about 12.5% return on investment, and amounts to an annual just over $47 million impact directly to the taxpayers. In an attempt to quantify, which is difficult, and unless you're an economics expert, for me it was tricky to understand, MID is worth approximately $519 million, and a lot of that is as a result of lifelong increases in salary and wages that our graduates earn, as well as other societal benefits, particularly related to health and crime, that comes with a more educated populace. As a summary, MC suggested or stated, Mid-Michigan College creates a significant positive impact on the business community and generates a return on investment to its major stakeholders, including students, taxpayers, and society. When we go out in the community, we generally get two questions as it relates to annexation. Number one, how am I going to benefit? And number two, what's it going to cost me? These two slides address that. Right now, our current tuition rate for our out-district students, which is what the Gratiot Isabella RESD students pay, is $220 a contact hour. Passing annexation in November will lower that tuition 40% down to $132 a contact hour. That's what the tuition is this year for 2021. For MID, that will generate approximately $3.1 million in revenue, but it will return $1.5 million to the students through tuition rebate, or not rebates, but tuition reduction each year. So really, in terms of gain, it's about $1.5 million for MID, $1.5 million for the Gratiot Isabella RESD students. And there are some implications with some of the state programs that are arising as a result of COVID, particularly the Futures for Frontliners program, which is the scholarship program for frontline service workers, like nurses, like waiters, things of that nature that the governor had announced. That program, it's you don't have to be in a community college district to benefit from that program, but the cost that's covered is only in district tuition rates. So anybody in that will have to pay the difference between in and out district in Isabella County. And also the Michigan Reconnect program, which is a program it's been sort of put on the back burner as we deal with some significant economic issues in the state. But hopefully that will be reinvigorated at some time when we have a little bit more freedom with our economy. And that is for students that are 25 or over. Same basic rule applies. They would get it free if it were in district. If it's out district, they have to pay the difference between in and out district. So those are all the things that voters get with annexation if it is approved. In terms of what it costs, I guess lucky for this area, not so good for MID. We have the second lowest millage rate in the state at 1.2232 mills. Our original millage rate was 1.5. It was reduced by the Headley Amendment. So it stays at 1.2232, which of course means for every $1,000 in assessed home value, residents pay $1 and approximately 22 cents to support MID. I've given you the most up-to-date numbers here in terms of what that actually would cost for median homes in these areas. In Isabella County, it would cost about $69 a year. In Gratiot County, will cost about $54, almost $55 a year. So those are what it costs, would be the cost to taxpayers. This is the actual ballot language when all of you enter the ballot box or send your ballot back by mail. It's two-part. The first one essentially says, do you want to join Mid-Michigan's district, yes or no? The second one says, can we assess the 1.2232 millage rate against your home or property? Both of those, in order for millage to pass or in order for annexation to pass, both proposals have to pass with yes. If one passes with yes and the other no, the proposal in general does not pass. So those are just sort of the facts about annexation. We wanted to get this out to you as quickly as we could. I know November seems like a long way away, but we're rolling downhill fast. We feel we owe it as a member of this community to educate folks on this, not necessarily advocate, but just provide you with facts as to what this actually means. If you do want some additional information, I did send it out via email today, but the website is also here, midmich.edu/annexation-proposal, or you can email us at the friendsofmidmich@gmail.com account. At this point, I'll open it up. If anybody has any questions, I am happy to answer them, whether it's this or if you had a chance to peruse any of the materials or anything else that I can ask for or I can answer for.
Any questions for Scott? I don't see any hands up, Scott, so I want to thank you for bringing it forward to us, and we'll see this fall, I think, on November 4th, whether things went right for you or not.
Okay. Thank you very much for your time.
Thank you. Moving on to item 2, that's the fiscal year 2019 comprehensive annual report. Doug Dieter, is Doug available?
Yes, I am here this afternoon. Can you hear me?
Yes.
Okay,
Hello, Doug.
It'd be a little better if it was a little louder.
okay. I'll try and speak up a little bit.
Thank you.
You're welcome. Well, good afternoon, everyone. I'm going to try and share my screen in case not everybody has a copy of the financial audit report to look at. So I will share my screen so everybody can see it here, hopefully. I'm not a Zoom expert either, so can everybody see it?
Yeah.
Yes.
Yes.
So we're going to talk about, it seems like ancient history by now, but the September 30, 2019 fiscal year end. We did issue the audit report back early March, and we were initially scheduled to come present at the board meeting in mid-March. And, as the world took a turn, that got postponed. So here I am today to go through this. I'm happy to answer or address any questions you might have throughout this, but we're just going to take a quick high-level overview of the financial statements, and we'll start off, we'll get going. So first of all, I'd like to congratulate the county. Every year, the county submits their audited financial statements to the Government Finance Officers Association, and that group puts the financial statements through a rigorous review. And then if it passes their muster, if you will, they issue a certificate of achievement for excellence in financial reporting. As the county has done in previous years, they received that certificate for 2018 that you can see here on the screen. And the county submitted their 2019 report to the GFOA as well, and should receive a similar certificate here in the near future if they haven't already received it. As I said, we issued our report on, you can see here, March 12th of 2020. And we did issue an unmodified opinion, which is the highest level of assurance independent auditors can provide. Means the financial statements are fairly presented in accordance with generally accepted accounting principles. Same opinion you have received over the last few years. So it's a good high mark for the county. The next page we'll look at is the balance sheet for the governmental funds. As you can see here, I want to focus mainly on the general fund. That's the main operating fund of the county. You can see there, the first section there is the assets. The county ended the year, September 30, 2019, with $11,307,000 in assets. Make that a little bigger if it helps everybody.
Doug, would you, if you're able to call out the page numbers, the commissioners do have hard copy audits with them. And so if you do, if you can easily call out the page numbers, that might be helpful.
I certainly can. It's page 28 is the page we're on right now.
Thanks, sir.
Yeah.
Can
So
you
if we go back, is there another question?
No, we were.
No, I just thank you for yelling out the page numbers.
Okay, all right. So back to the assets, $11,307,000 as of September 30, 2019. As you can see there, the majority of that is in cash and investments, the first two lines there. Another large portion is the taxes receivable, which is related to the amount of taxes levied that have not been collected yet. The next section, the total liabilities, about in the middle of the page, is $1,399,000. These are just some normal routine liabilities that were due at the end of the fiscal year that were paid subsequent to the fiscal year. There's some deferred, or it's called deferred inflows resources or unavailable revenue. So what this relates to is there are some longer term receivables that are not collected within 60 days generally of year end, and therefore are not considered available for fiscal year 19 expenditures. So that's offset and is recognized as revenue in the next fiscal year. The next section is fund balance. This is what's left over after you take your assets less your liabilities and deferred inflows. Total fund balance of $8,990,000. And you have about 74,000 what's considered non-spendable, which equals your inventory and your prepaid assets, because those aren't going to be converted to cash, so they're considered a non-spendable asset. And then the general fund also has some assigned fund balance of $3,120,000. This means this has been set aside for a specific purpose, but there are no external restrictions or formal commitments placed on those funds. And what's left over is the unassigned fund balance of $5,795,000. This is what's available, hasn't been committed or assigned for any other purpose yet. It can be used on a go-forward basis to fund the next fiscal year's operations for the general fund. The next page is page 34. And I highlighted a couple sections here, a couple items just to point out some differences. But the first section here is the total revenues. And this presents the original budget, final amended budget, as well as actual for the current year. And then the difference between your actual and the final budget is the last column that shows the variance to the budget. Total revenues of $18,697,000. You can see there, the majority of that is in your property taxes that increased about 5% or $600,000 from the prior year, and was a little bit over budget of about $100,000 based on the collections and the timing of the tax revenue. Some other intergovernmental revenue, $3,499,000. A lot of that is state and some federal revenue. Then you have your charges for services of $2.28 million. And that makes up the substantial portion of your revenues in the general fund during the year. The next section, look at the expenditures. The expenditures are broken down by function and then a little bit further by activity. And I just wanted to point out one item that if you were comparing this year's report to last year's report, the items in the red box here on my screen, last year were all presented as general government. This year they're broken out to show the judicial function as a separate function, separate from the general government. So a little difference in presentation there. Same activities are presented. So you can see there, your largest activities are general government, judicial, and public safety with $5 million and $6 million in total expenditures. And then you also have public works that's quite a bit smaller, as well as health and welfare that are quite a bit smaller. So overall, the county had total expenditures of $17,983,000 compared to a final budget of just over $19 million. So the expenditures were under budget, a favorable budget variance of just over $1 million, as you can see there in the far right column.
Hey, Doug.
Yes, sir.
George Green here.
Yep.
Up in the revenues department.
Yep.
I know we had some windmill revenue from Coe Township. I believe industrial personal property tax. Would that be in the property tax revenue there, that 11,857,000?
I would have to double check. I wouldn't think the windmill revenue would be. I would think that would be in the other revenue section or somewhere else. Or I would have to look into that for sure to let you know. Unless
I would think
Melissa
that
on the
would
phone.
have to be, I would think it'd have to be in the property taxes line, Doug. That is, it's actually personal property tax.
Industrial, yeah, that's what my question. Right. The industrial personal property tax is where it's at. And for the board, I want them to know where this is, because next year's coming. Those that are on the board next year, I think would like to know when they look at this budget again, where exactly that would be located.
Okay, I misunderstood. So if you're looking at the industrial facility tax as well as personal property tax, you're right. That would be on property taxes. I'm sorry, I misunderstood the question.
Okay, well, maybe I said it wrong, but then that would be in 11,857.
Yes.
Okay, thank you.
You're welcome. So if we look at your total revenues, we said were $18,697,000, and the total expenses of $17,983,000. We look at what's called revenues over expenditures. So you had $714,000 more in revenues than you expended. Now, this next section, the general fund also takes some money in from other funds. These are called transfers in of $1,475,000. And they also transfer out. So the general fund will take some unrestricted funds and transfer those to other funds of the county to supplement their budgets. So they had transfers out about $1,900,000. So based on that, the general fund saw an increase in fund balance of $287,000 this year compared to what the county had originally budgeted as well as amended to get to a decrease is what they're expecting. You're expecting of $629,816. So good positive budget variance. It increased your fund balance from $8,703,000 to $8,990,000. So a good increase to your fund balance compared to what was estimated through the budget process. All right.
Hey, Doug,
Yes, sir.
this just, George Green again, this just is back on revenues, when you told me that windmill money was in the property tax money, could that be actually put out to show like industrial personal property tax, say windmill revenue, however you wanted to put it? So it was separate there, so these folks could see, who's ever on the board, the actual amount that's in there, because this goes down. Once it's at 100%, it goes down every year, and you're gonna, after 10 years, you're gonna see what 30% is, and then it stays there. But what I'm looking at is that 11,857,000. I don't know what that amount of money was, and I know it certainly wasn't at 100%. It probably wasn't anything for, say, the Nottawa Township, Isabella Township, and Denver Township windmill up there in the 1918-19 budget, like we're in here. But the co-township's in here, but I don't have an idea by looking at this exactly what it was, unless there was another line item put in there for revenue to show it.
Yeah, that is up to the county. If they decide that they would like more detailed, we're able to put a little more detail of these items, you know, kind of like the expenditures where we break it down by activity into a little more detail. We can do something similar for the revenue section as well, if that's what the board would like to see. We can do that for next year.
Well, the only reason I'd like to see it is to show the board the actual windmill revenue that they can use separate from the property taxes.
Okay.
Thank you.
You're welcome.
I'd like to see what it is. I mean, you know.
We could also make that change in the county budget if you wanted. I mean, we have
Exactly.
everything flows into one line item for property taxes. We can certainly have another line item that would say personal property, and all the real taxes would go in property taxes, and the other would, the personal property would be delineated out that way. But that wouldn't be turbine revenue, that'd just be personal
Right.
property altogether.
But I'm looking specifically for them. And you know why.
Yes, sir.
In order to do that, we'd have to make sure the county was recording that information in more detail as well, so that I can't remember what account that revenue is recorded in, if it's lumped in with all the different property taxes in one account, or if it's multiple accounts. We'd have to make sure that if the board wants to see more detail here, that the county's accounting system is adjusted to reflect that level of detail as well.
That's what Nicole and I was just talking about.
Yeah.
So,
Okay.
yeah, well,
We'll be working with
we
you
can
on
work
that.
on that right now, or start it up.
Okay.
I think it'd be advantageous to the future boards.
Sure. Okay. The next section I'd like to look at is the MERS retirement plan that the county participates in for their employees and retirees.
What page, Doug?
Yeah, it is page 94.
Thank you.
Mm-hmm. Give you a second to get there.
Me too.
So what this page is going to show is historical trend information of what has happened with the pension plan since 2015, which is the year the county implemented the new pension GASB standards that changed pension accounting for all municipalities. So the first section here, the total pension liability section, this goes through and shows you the activity. If you look in the 2019 column here, this shows you how the total pension liability changed. Now, if you remember, the total pension liability is calculated by the MERS actuary based on the assumptions that the MERS board establishes and some different trends and that type of thing. So through that calculation, the MERS actuary has determined that the portion of the MERS plan applicable to Isabella County is $48,405,000. So that's your total pension liability. That's about a third of the way down the page. And that's an increase of about 1.1 million from 2018. Now remember, the MERS fiscal year is based on a calendar year. So the information you see here in your 2019 column is actually MERS December 31st, 2018 information, because they're on a different calendar year than Isabella County is. So this information is going to be 9 months older compared to your fiscal year end. And that becomes important in this next section where we look at the planned fiduciary net position. And what this is this represents all the assets that Isabella County has contributed into MERS to help fund the total pension liability. So you can see there's some employer contributions of just over $2 million, some employee contributions. And then you see this big $1,393,000 net investment loss. So, and you see in 2018, it was an investment income of 4 million. So you got a swing there of, $5.5 million in your investment income. And if you remember, December 2018 ended the year, the stock market was in a horrible position at the end of 18. It bounced back early in 19, but this is a snapshot of one point in time of where the stock market was at December 31st, 2018. So I would expect to see for 19 another significant increase investment income when you get your MERS information for your fiscal year 20. So because of that, the change in the fiduciary net position, so again, the assets that are held by MERS to fund the liability decreased about $1,940,000. And it reduced the total assets held by MERS at this point in time down to $33,517,000. So if you look at your total pension liability less the planned fiduciary net position, the difference between the two is what's called the county's net pension liability, or the unfunded portion of the plan of $14,887,000. So you can see this next line down, the 69.2%, that reflects the portion, the funded portion of the plan. So the county's plan is 69.2% funded, and that dropped from about 75% prior fiscal year, as you can see there. Now, again, given the circumstances of the stock market at the end of 19, I would expect to see that 69.2 turn around and go back up again, and probably be close to 75%, but we won't know until we see the final numbers from MERS. Any questions on that?
That's quite a drop as far as I'm concerned when you look at 6% on that type of money.
Yep, I would agree. And it has so much to do with the stock market as well as the assumption that MERS use, which neither one of those the county has any control over. The county can't tell MERS they need to change their investments or change their assumptions, obviously, because MERS is a large plan that covers many municipalities. But I mean, it is what it is, and MERS, is going to make this even worse going forward, where they're reducing their discount rate from, I think they're using 7.75% right now, which is the expected rate of return. They're dropping it, I think, down to 7.35%, I think, which that decrease in that one assumption is going to show a pretty sizable increase in the total pension liability as well. So the county probably won't see that until, maybe your fiscal year 21, I think, is when it will actually finally hit. So you got a little time to think about that one, but it's definitely going to make this funded percentage swing the opposite direction when they implement that new change.
Yeah.
Okay. The next page is, I'm sorry.
I just said thank you.
Yep, you're welcome. Next page is page 96. And each year, the MERS actuaries calculate what's called an actuarial determined contribution. So they go through the calculation and say, okay, for the county to fully fund their plan and make sure assets are there when the retirees request them, you need to contribute X amount each year. So as you can see this top line here, the actuarially determined contribution for 2019 was $1,477,000. And that is the actual amount that was contributed by the county for fiscal year 2019. So that's all I had on the financial report. I got another report I'll look at, but if there's any questions, I'd like to address them while I'm looking at this report.
Any questions for Doug, additional?
Okay.
Yep, move on, Doug, I guess.
All right, so the next report I will look at is the Single Audit Act compliance. I have the cover page on my screen if you're gonna pull up that report as well. And what this is any entity that expends more than $750,000 in federal awards is required to have what's called a single audit. And this is different than the financial audit that we just went through. This looks more at the compliance and to ensure that the county expended the federal grants in accordance with what the federal government said you should have spent the money on. So we do issue an opinion on this similar to what we did on the financial statement audit. We issued an unmodified opinion. Again, the highest level of assurance that the county followed the compliance requirements as set forth by the federal government in regards to their federal awards. Page 2 of this document starts what's called the schedule of expenditures of federal awards. And page 2 and page 3, as you can see, lists out all the different federal awards that were received and expended by the county during the year. So during 2019, the county expended $1,480,000 in federal awards. So the federal government dictates and sets a criteria of what programs need to be audited based on a set of criteria. And so if you look at page 10, towards the bottom there, you can see that we selected the Emergency Watershed Protection Program, which had about $750,000 in expenditures. So that's the program that was selected for single audit to be tested for compliance. And then at the top of page 10, you can see just a recap of what we've already talked about. So the financial statements, you can see there's the unmodified opinion listed here.
Watershed protection.
Internal control. So as part of the audit process, we do look at the internal controls over financial reporting, as well as internal controls over compliance related to your major federal awards. As you can see there, we didn't identify any deficiencies of any sort or non-compliance in any of the areas related to that. I think that's all I had to go over with you today. If there's any comments or questions, I'd be happy to take them at this point.
Any questions for Doug in there on this report that he's doing today? I know that it's basically back, what, 5 months ago? It's just the way things worked out to do it this way, and we thought it'd be best to have it done overall. But questions for Doug? Hearing no one for questions, Doug, I want to thank you very much for bringing that forward. And we're going to do some budget changes in the county as far as the way we report things so that windmill money will actually stick out and be listed that way on industrial personal property tax. That way next year underneath your audit, you can look at that and put that in there that way so the commissioners that are on this board after the election next year can actually see that number.
Okay, sounds good. I appreciate your time today.
Yep, thank you very much. I appreciate it.
Have a good night.
Thank you, Doug.
That moves us on to Elisa Haynack from the Medical Care Facility. Elisa?
Hi. I do want to mention too that we do also have Philip Alt. He's one of our CPA consultants, so he might chime in and help out with any questions that you might have.
Lisa, could you turn your volume up just a little or speak a little louder? You're coming in pretty low. Thank you.
That better? Oh, wait, I was way low. Gosh, I'm sorry. Okay,
You're
talked in a while. So I don't know if you heard me, but I did say that we have Philip Alt on the call as well. He's one of our CPA consultants here at the facility for us. And so he might chime in to help answer questions that you might have.
Just to check my audio, is my audio good for everyone?
Yep, we can
Yep.
hear you.
Great.
Yep.
Okay. So I am here this year requesting our full mill here at the facility. On a side note from financial, happy to report that we do not have any COVID cases in the building, and we haven't had any residents probably for about 8 to 10 weeks, which has been good. I think you saw our updates from the beginning, and we did have a total of 23 residents that did have COVID, and we had 18 of those recover. So one who was 102. So just to pass that little bit of information along. I believe that requesting the full mill would, based on 2019 taxable values, would give the facility about $566,000 additional dollars, and I think it would be about a 3% increase to the taxpayers. We are seeing currently with COVID and unsure into the future what will be happening, beginning with about a 10% revenue drop, and currently for the last 3 months we've had about an 18 to 20% revenue decrease, and that's based on census. Unfortunately, we haven't been able to cut expenses at that big of a rate because of having to have dedicated units with dedicated staff, you know, related to COVID, or having at any moment, I have to have the ability to open a COVID unit if I have a positive case come in. We are testing weekly. We have had a couple employees that have done some travel that have popped up, you know, they've isolated, and that hasn't, you know, caused any spread within the facility, luckily. About a little over $600,000 of the millage revenue would be to pay for our bond and principal for fiscal year 2021. I'm not sure if Nicole or anybody was able to provide you with our cash balances, because I know that's typically something that you like to see.
I have not done that, but I think we can probably, if you're.
Okay. I do have just a little Word document if you want me to share my screen with those amounts, because I know typically, you know, that's what the commissioners have wanted to see from us.
Sure. Yeah, if you have that, you should be able to share that on your screen right now. If not, I know our accountant, Melissa Franquist, is on and may have available to her those numbers if you don't. So there they are.
Okay. So this is our cash report as of today. Our current operating cash is a little over 1.7 million. We have the designated funds that have been designated, you know, by the board or for audit. The vested benefit liability reserve is set in reserve to pay out any, if we were to have to pay out all our vacation and sick, and that's funded maybe like 105%. I think we're about $75,000 above if we actually had to pay it out. Our audit reserve, that does have about $600,000 worth of CARES funds that we have received to date. Currently, I have them in deferred revenue, but starting with our June financials and starting probably with our cash funds, you know, right now would be when we would maybe be starting to dip into those funds. It's actually $575,000. I do have probably $300,000 to $400,000 in that account pending Medicaid audits that I've been paid that I could possibly have to pay back. And then the rest is set aside to reserve for if we were to have a Medicare RAC audit or things like that to cover. The debt fund is used specifically just to pay for interest and principal payments. In fact, what's in there will pay for our November interest payment for 2020. Retirement reserve is to fund our retirement account. Currently, I think we're about $1 million unfunded in our retirement, and our funded depreciation is for capital improvements.
Elisa, what would you say your fund balance is as of right now then?
Well, if you're looking at cash being our fund balance, the total of those two items is $6,320,000.
So that's you would consider that to be your fund balance as of today?
Well, and I think to answer that question, I mean, we do have the liability side, and Alyssa kind of alluded to it. A lot of that 4.6 million is associated with liabilities. So if we were trying to identify a liquid cash balance or a fund balance, it would be closer to the 1.75 million, because a lot of the designated cash amounts are cash set aside to fund the liabilities that we have sitting on our balance sheet.
Then Phil, what would that be in a percentage of your total?
Operating budget.
Yes,
So,
of your operating budget. In other words, I'm trying to come up with a reason for you to go to this 1 mil, and I know that Elisa has said that, but I'm trying to find out what you have in a percentage that I can look at as far as a fund balance. And also, I'm just going to spit this out that you're going to get some windmill money this year from Coe Township.
Okay.
okay. Yeah, I mean, when I run some of the numbers, I mean, our operating expense budget is around $14 million, like $13.5 million. So that 1,755,000 is about 13% of our operating budget.
So you'd say your fund balance percentage would be about 13%.
Yes.
Okay, thank you.
Mm-hmm. Yeah, and to elaborate on Alyssa's comments related to COVID-19, so there's stimulus funding that we're receiving from the Department of Health and Human Services, the federal government, through provider relief funds. Mm-hmm. And to date, we've received $570,000 from that stimulus package, and there's expected to be additional funding to come through there. But to justify that stimulus money, we have to track lost revenue amounts. And Alyssa kind of alluded to it, that we do have similar operating expenses, but less revenue. So that stimulus funding is falling short of what the revenue replacement we need to continue to fund those operating expenses, which is causing us to eat into some of this operating cash that you see.
Well, and I think it's important to note too that, we're kind of on the beginning of seeing this. If we, figure lost revenue for another 4 months into the end of the year, and possibly, if anything goes into the beginning of next year, it's difficult because we're seeing a lot sicker people. And also the hospital census is down. And because the requirements of keeping separate units, there's times when I'm bedlocked and I can't take anybody because I'm having to hold somebody in a certain spot for 14 days because you have to have a special unit to bring people into, but I'm holding another room over here because then when they're ready. So logistically, there's some issues that why I can't just be bringing as many people in as we typically had in the past, because I have to have a designated COVID unit that only has people with COVID. I have to have a designated admit unit, and then I have to have the rest of the facility, and I can only rotate people through appropriately, you know, on a 2-week rotation. So, you know, although I think we could, you know, we're looking logistically how we could possibly improve our census, but I don't see by the end of the year getting back into our 90% census like we've typically ran. I think this is a, you know, it's going to take us a good, I would say, 8 months, a year to get back, and, you know, if we ever can get back to a normal basis. It isn't a short-term problem.
A question, Lisa, can a COVID person stay in the medical care facility as long as long as a person with medical conditions such as age and things like this that has a hip problem or something? In other words, if say I had a hip problem and I had to stay in, I don't know what I'd have to be in there, like Commissioner Ling was at one time. Then the next person comes in with COVID-19, and I don't know how long that person would be able to stay there to get healthy enough to leave. Is that what I got? I guess the best way I could say this, pretty close to the same time frame or not?
You know, it depends, to be honest. We are allowed to take a COVID admission, but I have not wanted to do that. And I haven't been presented with a request to take a COVID person. Anybody that we've had in our COVID unit has been a person that got it here. But yes, it would be similar depending on how sick they were. It would fall under the same thing. But I haven't in our area had a COVID referral to come in with COVID. But hence, I have my COVID unit that has 7 beds that I don't have anybody in, and I can't put anybody in. And so that's kind of some of the logistics I'm talking about, is that I have to hold that unit because I'm required to have it.
Gotcha.
But yes, if somebody did come in with COVID, it could be the same length of stay. It would just depend on how ill they were and what illnesses they were having. They would probably definitely stay for 2 to 3 weeks, because they do have to stay on that unit for 14 days.
Right.
Do you want to go back to where you can see your commissioners? Would you like me? Do you have anything else to share on your screen, Alyssa? Okay.
I don't. Does anyone have any additional questions or thoughts?
Chairman Green.
Commissioner Horton.
First of all, hello, Alyssa. How are you today?
Hi, good.
You look pretty calm. I know your life has been nothing but stress probably since March. So I just got to say off the top, right off the bat, this is my 8th year as a county commissioner, and I've said this the previous 7 years, that I do have a contractual relationship with the medical care facility as part of one of our businesses. However, this is a tax entity issue, and I think that I can certainly have a vote here and not be prejudicial in any way. That being said, if you look, she's been the revenue, the mills have been 0.7 since I believe I've been on the board. That's at least what I recall anyways. This year, the requested is to go to 1.0, which was voted upon by the taxpayers. And I think Alyssa's probably, and I'm not going to speak for her, but I'm sure this isn't asking lightly. COVID has been an experience, if you're in the healthcare world, unlike any other. I've been a pharmacist 33 years. I think I've shared that over and over. And it's every day you come to work, every day you have your employees, every day you have your patients, you're concerned. So I am not opposed to this whatsoever. I think there's a lot of unknowns yet. We're not through this by any means. And this is something that it's to maintain, this has to be. I mean, we can look at this, or the commissioners can look at this next year if they choose. But as far as I'm concerned, this year, the 1.0, 1.0, I mean, not 0, but 1.0, I am certainly not opposed to it.
Other questions?
Sure.
I don't see any hands raised.
Commissioner
Commissioner
There we
Smith?
go.
Yes.
Thank you, Chair Green. Aside, I have two, I guess, one statement, one question. The statement would be, I think you're right. We are in a new norm, and we probably need to think of it as a permanent norm, that we're going to have less residents be able to be in your facility because of the situation with COVID. And that means that we're going to have higher costs to run the facility. We'll see, whether we can make something happen in the future, but I think we're in a new norm. And so I totally support this increase to 1 million so that you have good care for the residents there. The second thing is I do have a couple of constituents here that have come to me that had residents at your facility, and they were concerned about their family members being able to get out, see family members, or even outside. I was wondering, were you able to allow family members in recently?
Make me cry. No, I feel like I'm holding people prisoner.
Yeah.
Between the governor, I'm governed by the governor, CMS, DHHS, LARA, and they're just not letting up. And now the Attorney General is getting involved in saying that they're going to hold facilities accountable, because there were some facilities that were kind of looking at the language gray and we're doing outside visits, and they've put a kibosh.
Yeah.
That. I was on a special committee that was giving recommendations for opening nursing homes to the governor. To my knowledge, that 35-page document is sitting on a desk somewhere, and she's put a new task force on that. And so unfortunately, we aren't able. We're trying to get creative as we can. We have set up window visits down in our adult day program area, in a kind of a garden, big window, and with intercoms. But other than that, we haven't been able to open to anything besides medically necessary visits. In fact, we are having people not even going to the dentist right now. That's how.
And no, it must be a difficult time to keep the mental health of your residents, and
it is challenging. And that's why too, we're not able to just cut staff to compensate for the lost revenue, because it's sad around here right now. It's really sad.
Thank you.
We do have a resilient, group of residents in our building. They've been through a lot in their life, and they understand, and they want to be safe too. But I'm not going to sugarcoat it that it's not the same as, we were a building with a lot of visitors. We had a lot of family support on a daily basis. And, a lot of our residents are, well-known community members, and they have visitors from, all over the, neighbors and CMU. And, we have a lot of people outside of this building that care about them, which is good. But in a time like this has proved to be very difficult. So I'm not seeing anything in the near few weeks of being able to lift visitation restrictions, unfortunately.
Any other questions for Elise? Well, Elise, I think you got an honest reason to go to that 1 mil. I'll support it myself on it, and it'll be put on the agenda this evening for a vote. So thank you very much for coming here. And the COVID-19 has affected a lot of people in a lot of different ways, and there's not a heck of a lot we can do about it except pay the bills as they come. So thank you, and Philip, for doing that.
Okay. Well, I want to thank you all for your support. You've been, very supportive of the facility, and I didn't take lightly coming and asking for the full amount this year.
Right.
I did want to ask Commissioner Green, should I attend the meeting this evening? Do you think there'll be more questions or?
I don't think there'll be any more questions. It'll be brought up as a motion, and if there's questions from the board or just a little discussion with the board as to why you really need it, and we know what that is now. If you want to come, you're welcome to join, but just do what you
I
want.
will send her the invite. I will
Right.
send her and Philip the
Yep.
invite so they
Nicole will
can
bring
join.
you in.
Thank you.
Nicole.
Yep, thank you.
Thank you.
We will move on now to appointments to boards and commissions. We have 3. Is there anyone that wants to speak on Lee Dean on the first one there? Commissioner Hope?
Yeah, thank you, Mr. Chairman. I don't know Ms. Dean, but her application was pretty impressive. Her educational background, she has a master's in public administration and a bachelor's in social science, both from CMU. I thought was impressive. She applied for 3 different boards, but this one, the Commission on Aging, was her top pick.
Yep.
So.
Yep. Anyone else on Ms. Dean? Moving on to B, that's the Department of Health and Human Services. Vicki Block is the incumbent. Of course, Ms. Dean actually applied for it also. Vicki's been on that block or board for a long time. So I assume that as an incumbent, she should probably be put back on that. So anyone else want to speak on any of that? Let's go to item. Excuse me.
Only that I've known Vicki Block for a number of years, and I think she does a wonderful job on that board. So I would agree that as an incumbent, she should maintain her position there.
Thanks, Commissioner Harton. Let's go to item C. There's 4 or 3 incumbents there, and then Lee Dean was also, there's a Shelley Smith. Does anybody want to speak to any of those folks that are on there? Commissioner Hope?
Mr. Chairman, the incumbents, we might as well put back on there in my way of thinking. But Shelley Smith, I know her kids go to Renaissance with my grandkids. She's very involved there. She's the president of the parent-teacher organization. She's very involved in a lot of community activities. And I thought it was interesting. She's worked as a direct care worker in group homes with cognitively impaired adults. And I think that may give her some unique perspective that would be of value to this committee.
Thank you, Commissioner Hope. Anybody else want to speak on Shelley? I believe you're right. The 3 incumbents would be good going back on, and then, well, when we get to the vote on it in the evening meeting, but I mean, if you put Shelley Smith on there, that'd make the 4, and that'd make a pretty nice deal. And actually, all Lee Dean's got a spot, and we've all taken people up. So let's move on to committee reports, finance and administration. Gentlemen.
Thank you, Mr. Chairman. First up on our list is consider accepting and placing on file the August 6, 2020 routine personnel items as presented. Pretty straightforward again, wage increases, step increases, a retirement, a new hire. Nothing out of the ordinary that I could see here. So, any commissioners have any questions on any of this? Hearing and seeing none, I'll move forward to this evening.
Okay, the next item then is consider ratifying and placing on file the July 31st, 2020 invoice list in the amount of $92,950.08. The revised August 7th, 2020 invoice list in the amount of $272,850.25. And the revised adjustment list dated August 13th, 2020. And we could take those one at a time. The July 31st list, fairly small list, but Verizon Wireless monthly cell phone bill is on there. And then 5 public defender appointments for roughly $36,000. And that constitutes the bigger items on that list. The August 7th list, quite a few things on there, the BSNA software, JP Morgan Chase Bank, credit card charges, hats, Preston Community Services, monthly medical examiner contract. These are things that we see every month. The WellPath monthly medical services contract, the Clark Hill PLC 12,000 amount is on hold pending litigation.
For the PS charges.
And then there's some district court transmittals and the Wade Promotions advertising outreach for Veterans Affairs. Okay. And then the adjustment list, excuse me, we have the Gordon Food Service early payment discounts that we always see. And then one invoice decrease due to sales tax being incorrectly added. 2 invoices were voided because they were already paid. And 1 invoice decreased because of incorrect mileage rate was used on that. So does anybody have any questions on those 2 lists or the adjustment list?
Tobin, I just have one thing to add real quick. Nicole, I really like the information that you forwarded to Tobin and I don't know if the rest of the board got it in regards to the public defender's office and how some of the money is being spent and how some of that was addressed. I don't know if the remainder of the commissioners got that or not, but I think it was a fairly good read. So for Mr. Hausman, so.
I was gonna say, I didn't get
Yeah,
it.
they did not receive that information, Commissioner, because it was a question, specifically posed.
Right.
But now that you bring it up, I'll be happy to forward that to the rest of them.
Yeah, it kind of spelled out how some of these increases we've seen because they're basically the court starting back up and the backlog and everything. And also I believe there's a couple openings in the public defender's office. So I think it was a pretty good explanation of what the public defender has gone through basically this year. So I thought it was a very good, I guess it was a memorandum, not a memorandum, but a letter Mr. Hausman wrote, so. Okay.
Any other questions, comments on those? Hearing none, then that item will move forward to tonight's agenda.
All right, next up, consider adopting Isabella County Board of Commissioners Resolution number 20-08-01, pledging full faith and credit to Little Tobacco Intercounty Drain Bonds and authorize the board chair to sign the same. On this right here, the Drain Commissioner's petition for improvements to the Little Tobacco Joint number 442 County Drain. The Drain Commissioner in the process of securing financing is asking for the county's full faith and credit for the bonding of this project in the form of a note not to exceed $11,100,000. As this is an inter-county project, Isabella County is apportioned 30% of the project cost, and Clare County is apportioned 70% of the project cost. We've also, in our committee, we discussed that the Isabella County would only be, a worst case scenario, on the responsible for 30% of the drain project. And I believe we have seen this before. Now this is coming with the actual dollar amounts, if my understanding is correct. We have Mr. Willoughby. I see he's attached. Do you have anything to add to this, Mr. Willoughby?
No, my attorney is on this meeting also, if anybody has any major questions.
Any commissioners have any questions for either the drain commissioner or his attorney? Chairman Green.
Commissioner Willoughby, I've always asked this question because I guess I just stand it. I know we're at 30% on this, a portion of this property. The rest is 70, but when I look at Clare County's bond rating in that, which is next to nothing, I just don't understand how 2 counties, one with an excellent credit rating, the other one with a junk bond rating, can go together on a project, and why money is put into the 30% when 70% is on the other side. I don't understand how it truthfully works in there. Do you have any explanation that helps me out on it?
I'm sure Roger would.
Yeah, I'd be happy to address that. Thank you, commissioners. The percentages that are, an inter-county drain is a cooperative effort between counties, and obviously, involves a drainage district that traverses the counties. And the percentages that are established are established reflecting the percentage of the flow contributed to the drain by the various counties. So it's really a scientific determination representing the benefit that each county receives from the drains. And that, in this case, that percentage was established a number of years ago, and at least 3 or 4 years ago, I believe. So that's an established division between the drainage districts, but it is the drainage district that's one entity that's borrowing the money. So the bonds are issued by the drainage district, and hence, the two counties do share in that joint cooperative effort through the drainage district. It was correctly pointed out that the pledge that is made by Isabella County here is only to the assessments levied in Isabella County for the 30% part of the drainage district.
I guess what I look at is we need the drain district, and you want the folks out there to get the water moved away as quick as possible. I guess I just don't, the money part of it is what I have a problem understanding. We have to go out and bond it like we're bonding $11 million on just 30% of it. So I'm imagining that 70% of it that Claire has to bond, if the drain's 11, you're talking well over $20 million, Roger, or someplace in there.
No, I'm sorry. The 11 million one is the total between the two counties. So the percentage apportioned to Isabella County is 30% of the 11.1.
So we only need 3.3 million.
You're only pledging credit towards the 3.3 million.
Oh, okay. I thought the 11.1, excuse me, that's my mistake, because the reason I thought is that 11.1 was what actually is Isabella County, and that's my mistake. Thank you.
You're welcome.
Any commissioners have any further questions? Hearing and seeing.
Jim?
Yes, Frank, go ahead.
Yeah, this doesn't, I got Bob here. I want to ask him a real quick question, not on this issue, but why he's available. Bob, I got all those letters on the redrawing the boundaries on the North Branch and the drainage connecting to it. What triggers that? Is that a yearly thing, or is it just when you have a project that triggers the redrawing? Or seems like a lot of paperwork. So
while I'm talking to the whole board, so everybody knows what's going on, when I had to assess our match on that grant we got to do the work after the flood of 17, I went through the roll on that drain had not been touched since 1954, and I went through there and found a lot of mistakes, discrepancies, things that were totally unfair. So I said, if we're gonna, and that drain does need some work, and I needed to correct the roll. While it is so much it's a huge district, and then with the Beale City issue going on, which is directly part of it too, I said I hired Spicer and we're correcting the roll and the drainage district boundaries and correcting that. Well, that's basically half of my drainage in this county is that Chippewa, North Branch Chippewa watershed. So, and it's all going to be corrected and the rolls will be right on it. And I'll be a lot more comfortable assessing projects and repairs to it.
okay, I was just wondering what the trigger was, why that was done, and what was the reason. Thanks.
Yeah, you probably got, you probably got 6 or 7 different ones because of
yeah, I think it was like 25 or 30 between me and Dad.
Oh,
so.
it could be. It could be. Well, the North Branch has 30 some tributary drains, and you probably got property in 8 or 10 of them. So, yeah.
Yeah, so. Okay, thank you. That's all I have.
Any other commissioners? Hearing and seeing no more, that will move forward to this evening.
Item number 4 then is consider accepting and placing on file the fiscal year 2020 third quarter financial management services report as presented. And this is in a format that we've seen before. They kind of list out what they're working on. They're evaluating the county's business structure. Most processes have been done from home, remotely, which has added a little bit of, maybe I don't want to say difficulty, but a little bit of a challenge maintaining strong controls. They continue to work on the trial court bank reconciliation, working on the budget process. I know Steve's been at finance committee meetings, leadership meetings, work sessions. Also a secondary analysis of all journal entries once they could return on site. And by the time they were able to actually be on site, there was over 600 journal entries to approve. And then number 6, their operation of quarterly budget versus actual report that we're going to see next. And then the last item, again this year, they're doing a detailed analysis of the delinquent tax revolving fund. So any questions on that?
Just a comment, George Green. I think it's a very good report, and I'm glad that he went in and looked into the TDR fund again, because I think we've got to keep on top of that because of the relationship we have right now with the treasurer and the Isabella County Board. Thank you.
Yep. Anything else? All right, hearing none, that item then will move forward to tonight's agenda.
Next up is consider accepting and placing on file the fiscal year 2020 third quarter financial report as presented. As the commissioner can see, if you look at the taxes under the 6/30/2020 report, 7.98%. It's not seem like a lot, but as we all know, September, our tax bills are due. So all that'll be coming back retroactively once it's received. So that should get us quite a bit more money. Otherwise, we're in a whole heap load of trouble. One of the things I wanted to point out, and I think Nicole answered some of this. If you look at charges for services, we're at 53.52%. That is an unknown. That could be some issue for us going down the road, I think. Nicole, if you can speak to that, but that is basically when the county shut up for 3 months. Or shut down, and we lose some charges for services, like it says. But Nicole, am I correct on that? I think that's what you explained to us in our board meeting or our finance committee meeting.
Right. That one in particular is going to be hard to make up. The federal and state revenue could come in even better than we predicted. I know we're losing our August revenue sharing payment, but we are getting replacement revenue to the tune of 1.5%. Still waiting to see what our share of the payroll reimbursement grant will be. So we do have some good news coming, I think, for federal and state revenue, but charges for services are going to be the tough one to recoup. Our doors were closed.
Okay. Yeah, that's certainly an unknown that we're going to probably have to address one of these days. So any commissioners have any questions or comments on this?
Not much we can do, Commissioner Horton. It is what it is. You got to.
Yeah. So, okay, that will move forward to this evening.
Okay, item number 6, consider approving the fiscal year 2020 general fund budget amendment to fund the Seagull Waters pay grade and annual salary implementations for the Office of Sheriff, Prosecuting Attorney, Register of Deeds, Clerk, Drain Commissioner, and Treasurer to fund the jail project design costs and to account for legislative changes in state revenue sharing, all totaling a use of $920,952 in general fund balance, and authorize the board chair to sign the same. So, so mainly, like it says, the wage and salary increases that we approved after looking at the Seagull Water study and through that process, and then all the associated costs with those, you know, your retirement costs go up and your FICA costs and things also go up. That's the bulk of that. The cost for the jail design project, that'll come back to us, Nicole, if I'm correct, once we seek financing for that project. But in the meantime, we've got to pay those bills.
Yes, it was, Commissioner. It's very important this board passes what's called a reimbursement resolution to that effect. So in case I forget that, please remember that down the road when we do the notice of intent.
Okay. Anything else you want to add to that, Nicole, or anyone else?
Oh, but I have a question, or just wanted to bring up out of that total. It looks like what we've done so far, roughly, it's around $456,000 in wage adjustments and salary adjustments and workers' comp and everything. A vast majority of that, two parts went to, as we had discussed before, the sheriff, and the corrections department. And we basically have stated, we've gone on record saying that those are very important for public safety. Also to maintain numbers, because we weren't recruiting and we needed that. So I think that's a necessity. We also discussed, I think, as we discussed in the past, the putting our next round, roughly 134,000 estimated if everything goes and gets approved by these board of commissioners in regards to the rest, the trial court, and also I believe in the department heads sections of the employees. They'll add basically another 134,000. So this probably won't be the last budget amendment dealing with the salary and wage that we had previously discussed. Again, though, a large amount of that has to do with public safety, and the commissioners, I think, all were in favor of that. So just to let you know, though, that's probably going to be another 134 coming in regards to the rest of the employees making sure all that's being done. I think we talked about going retro to April 1. And we'll probably deal with that in the Finance Administration Committee, probably in September, I think we talked about doing. So that's all I have, Coleman.
Okay. Anyone else? Hearing no other oh, yep. Commissioner Marino, you're muted.
Yeah, I'd like to, I noticed something on the options to balance the general fund budget. And it was increased rent from district health. It's on page 2 of that. Increased rent from district health to offset additional appropriation requests, $35,035. I just found that very short-sighted, especially since the expenses for the health department are just going to increase with the effort to fight COVID-19. And also some counties don't even charge rent at all for district health departments. So I just was surprised to see that there. I really wouldn't.
Yeah, Commissioner.
You're jumping ahead. Commissioner Marino, you're jumping ahead to our next item.
Exactly.
That's okay. I want to reiterate that on the. No, that's okay. We're on item 6 yet. Anything else on item 6, the fiscal year 2020 general fund budget amendment?
Tobin? Just a quick
Yes, sir.
question. I know we've been paying right along for the contractual services, the architectural engineering planning for the jail. And I don't know if this is the first budget amendment that we've had related to that, but just how we're doing in terms of the original contract quote price, if we're on following that along, or is it costing us more, costing us less? I know it's not a question that can be answered tonight, but perhaps we can get some kind of report on that in the future.
Can I answer that? Jerry, what I wanted to have a report, at least a couple of them right now, by the actual Clark Construction and the architectural firm. But I wanted it face to face, because I think it means a heck of a lot where you can look at them instead of the way we're doing it now. So far, we haven't been able to do that. So what I've asked is somewhere in September, probably maybe the 1st of September, which would be our first week, I'm going to have an update by Clark Construction and also the architectural firm to come on board, because we're doing this in this style here that I certainly don't like, but I know we have to do it, and they'll bring you up to date on that. Basically, right now, you're just paying the architectural firms and the Clark Construction stuff for what they're doing on the building the jail, as far as getting it ready to put shovel in the ground, which is not going to probably happen this year. As you know, we have a closed session this evening to talk about a land purchase, but as of right now, Jerry, I wanted to have 2 by now. I thought we could have them in person, but we can't, so I'm going to have to go on a Zoom committee meeting and bring them up like this, and then you can ask questions to them. But the actual money we paid out now is basically for architectural work and the Clark Construction, where they enter into things and talk about what things are going to cost and things like that.
Well, thank you.
Yep.
Nice to have it.
Thank you for the question, Jimmy.
We'll look forward to seeing them in September then.
Yep.
Good deal. Any other questions on this one or comments? Hearing and seeing nothing else, then that item, Mr. Chairman, will move forward to tonight's agenda.
Okay, next up is the fiscal year 2020 draft budget discussion. Nicole, I'm going to turn this one over to you, if you wouldn't mind, if you want to present it.
Certainly, I don't mind at all. Going back to what Commissioner Marino was referencing for your attachment for item 7, the couple of pages in the beginning. I don't know, Chairman Green and I met with Steve Hall from the Health Department yesterday morning to talk about the lease. I don't know, Chairman, if you want to talk about that or not, but we are going in a different
Let me
direction.
just butt in for a minute, Nicole. And Commissioner Marino, you sat with me on the Board of Health, and I don't know if you remember, when they went back from the formula that was taxable value, or actually they went from SEV back to taxable value. Isabella County owed about somewhere a little over $70,000. And what the board did, the board gave us 2 years to actually work that into our budget. And we met with Steve Hall yesterday and talked about that. And basically that 32,000 or 35,000 you see there that's on it, that's the part of the budget that we have to put in this year. So we're going to raise our amount we put into the budget for the Central Michigan District Health Department from 385,000, and you can add the 35,000 roughly to that, Jim. So we're up to about 418,000 that'll actually be the number this year that'll go into our budget. The next year budget 21-22, we will be up to that 430-some-thousand.
Okay, so is that raising the rent?
No. We don't even have a rent agreement as of right now.
Okay, but that's what it said in this. I remember what we did in that meeting, and I remember that 70,000 and all that.
Right. Yep.
Okay. Thank you. I appreciate it.
Thank you.
In the recommended and requested budget, that the increased appropriation was built in there, so it is up to the 417,000.
Okay.
To offset some of that increase in appropriation by negotiating through the lease, and it's not the right time for that clearly. So we are taking that one off the table. So to Commissioner Marino's point, if you are looking at that, the options to balance the general fund, which would be page 2 of the attachment for this, we have kind of taken that one off of the table, if you will. I'll talk about other things still on the table would be potentially the clerk's additional revenues that she brought to the table. That might be a possibility. And looking at a net insurance change is going to become very important. Also on that list was use of delinquent tax funds. And I know we had a tough conversation about that in finance, given the environment right now with the ongoing lawsuit. I have talked with legal counsel and they remind us that that is still a tool in our toolbox at this time. Because there has been no judgment on that, we are able to use it as an option to balance our budget. Our attorney does caution us that going forward, we'd want to have a plan B in place if we do use those monies to balance our budget. I would propose, as we talk through some things on budget, we're going to need some additional funds if you don't want to use fund balance to balance the budget. Delinquent tax offers us some coverage in that area.
Exactly. Additional funds.
Currently, today, because today we don't have a judgment saying we can't use it. If we use it in the budget to balance it, I would highly recommend that we immediately work with our finance committee to develop that plan B. Administration will recommend it, but I'd like to work with finance on what that looks like. So if we do build some of these funds into the fiscal 21 budget and we get a judgment against us, we're not scrambling to put a plan in place. Instead, we have a plan that we will enact. Right now, we don't have that plan. The other big piece and another potential savings on the table is a change to our insurance. And this would be a change to the Blue Cross Blue Shield, the actual plan itself, moving to what's known as the Simply Blues platform. We have on our screen Lisa Hoppy. She is joining us from 44 North. I'm not sure if you're on phone, joining us on phone. Okay, great.
Good.
You're muted, but you aren't. You're joining us on the phone as well. So thank you for doing that. So Lisa Hoppy is account manager for our healthcare coverage through 44 North. And Lisa, I don't know if this will help or not, but I would like to screen share the differences of going from our current plan to a Simply Blues plan. As I've explained to finance, this move would save approximately $200,000 in general fund. It would save more than that overall countywide, but in the fund that the general fund budget that you adopt, it's really, we need to pull out that general fund piece. We can't take that entire savings just from general fund. Portion of it is through Commission on Aging Fund or Parks and Recs Fund, that type of thing. So there's that little box that I can show of the changes. You just let me know when it might be appropriate to show that. Because in order to get savings, we're going to buy off the shelf a different plan. We still have our HRA in place to fund that high deductible plan down to a lower deductible plan. But Lisa, let us know what this means. Switching to Simply Blues, what does that mean?
Okay, so I'll set the table here just a little bit and just reiterate. Yep, you are spot on in moving from your Community Blue. You have what's called a Community Blue PPO 15 plan, and looking at what we call the Simply Blue $4,000 deductible plan. with the concept of reimbursing it down to your same benefit levels that employees have right now. We call those plans A, B, and C. But Simply Blue does differentiate in how they process claims. Their network doctors are still the same. It's still that PPO network of doctors, so that doesn't change, but how they process claims do. So by making the change in the purchase plan, it reduces the premium by $430,000. But because of the different way it processes claims, we kind of went through and kind of did some analytics. How much of that savings would be used to make benefits whole? And that came out to $136,000. So the net savings was $293,000. And I realized, behind the scenes, we're gonna kind of divide that out differently. But what does that mean is right now, your current plan, when you go in for an office visit, you have just a flat office visit copay. Whatever they do there, if they remove a cyst, they do a procedure in the office visit, they charge an office visit copay, and Blues picks it up 100%. Under the Simply Blue, what happens is the doctor's allowed to unbundle the charges. They will bill an office visit, and now they'll bill a procedure. So now removing that cyst is, you've got your office visit copayment, but now you have a procedure going towards your deductible. So you can see on that front, that's where that extra, where we're taking that $136,000 away from the savings, because we've got to bring benefits back to the promised benefit level. And right now, a bulk of your enrollment is in Plan A, which is the 100% coverage. So for those that continue to stay enrolled in that, they're not going to feel very much difference. Now, they will on things like chiropractic coverage. Currently, your members per enrolled body, each one can have 24 chiropractic visits, but under the Simply Blue, it's reduced to 12. And then after that, then there's no coverage for that, and they would just pay cash for those adjustments. Right now, under physical therapy, you have 60 visits. Under the Simply Blue, that's reduced to 30. But those extra things applying towards deductible for those in A, it's still going to be covered 100%. Those that will feel those costs are those that elect Plan B and Plan C, because now more things are going to apply towards their $100 deductible for Plan B, or to Plan C, their $500 deductible. So those are going to be things like your pre and postnatal care. Right now, that's covered 100%. Allergy testing is covered 100% by Blue Cross. Under the Simply Blue, that does get applied towards deductible. So it's just the different nuances of what gets applied towards deductible. One of the other main differences is under your current plan, when you go to the emergency room, if it's for an accidental injury, so I'm rollerblading and I fall and hurt my wrist, that's an accidental injury, I won't have my emergency room copayment. If I go and I'm admitted, okay, I'm having pains in my side and I need to have my appendix removed, and they change me from ER to admitted, my emergency room copayment gets waived. Under Simply Blue, it does not. So just some nuances there. The other is with your current plan, if you're referred to an out-of-network provider, then it gets pulled to an in-network benefit level. With Simply Blue, they don't do that. You have in and out of network benefit coverage. If you stay in network, it goes towards your in-network deductible. If you go out of network, it goes to your out-of-network deductible benefit level. We don't see that very much anymore. So that one's kind of, I would say, is kind of a low-hanging consideration. So I want to talk through those differences.
Lisa, I'm going to throw that up on the screen right now.
Yep.
Like, I think this captures everything you talked about, the ER copay not being waived. This is what will change if we move to Simply Blue.
Correct.
I have a question. Does it have anything to do with prescription drug copays. I know with with the Affordable Care Act, that's mandated. So I'm sure that's going to continue to stay the same rate, or is copays going to have to go up with that? How is that going to work?
Your prescription co-pays with the proposed plan stays the same. So it'll say $10 for generic, 40 for your preferred brands. And then for about 2% of the prescriptions, it's about that non-preferred brand at $80. So that's staying the same. Office visit copayment at $30, emergency room at $150.
Looking at this chart right here on the Simply Blue, you've got 7 bullet points or 7 asterisks there. Is there a way, and again, I don't know if they're all would apply, but is there, like on chiropractic visits, how many the employees, as far as the amounts that they use per chiropractic, how is that being used? Same thing with ER copays, how many for the ER, data
Absolutely.
like that.
Yep,
Same with,
I have that right here, actually. In the last year, you've had 79 emergency room usages, up from the prior year.
Quite a bit, right, Lisa?
Yep, it went up, and let's see here, because the prior year it was 54. And one of the things I did is kind of like, okay, do we have a leaky faucet here? Do we have people maybe a mindset change in that? And I only found one person that utilized the emergency room in excess of 3 times. So there wasn't, it's just kind of, you had a lot of small claims in this last year. So, and so did the number of people that maxed out that carrier deductible and that carrier coinsurance. Chiropractic, the prior year it was at 248, and this year it's at 300. So up just a bit there. And office visits, let's see here. Office visits went slightly down. The prior year it was 1,483, and this year it is 1,322. The other comparison I took a look at is last year you had 2 really large claims. So you had 2 claims that were over $175,000. This year you didn't have any, but you had a lot of that small and mid-range type of claims. So there was a lot going on. So kind of giving just some backfill on what that looks like and how that impacts the renewal. And that's why when we come to open enrollment time, we sit down and you guys have very good attendance. I will give you that. And I know I say this every year because employees come to those educational meetings and they get the reminders on, you guys have help with 44 North. We are open 24 hours a day, 7 days a week. We do reminders on accessing care, and we try to remind them emergency room is the most expensive place to access care. And here are some resources that you have available to you to help with this. So your employees engage on a higher level than most.
okay.
Commissioner Engler here. How Teledoc, has that been widely increased this year, or you've seen in anything? How's that working out, that program?
Let me take a look here. So far this year, you have had 19 consultations with 23 prescriptions written. In 2019, it was at 14 visits. In 2018, you had 19 visits. So already this year, you are pushing past where you're normally at, which I think part of that is COVID. It's a access point where we're seeing people who were, kind of timid about it, going, now, do I really want to talk to a doctor over video, over my phone? Now they're realizing I don't have a choice. We're kind of, unable to get into doctors, or when you can, it's so limited. And then some people who wants to, they want to kind of stay safe and, kind of isolate. So, yep.
A follow-up question
Yeah.
on that one. You said, maybe I heard the figure wrong. You say 19 for all county employees? There were only 19 referrals or?
19 usages of the teledoc. Yep. So you've had so far just through this year, because that one tracks a little bit differently, but for the calendar year of 2020, you've had 19 folks use the telemedicine.
That's interesting because I think my wife and I used it 3 times. It doesn't seem to me that it gets a large number of uses.
Okay.
We found we find it an excellent service.
It is, and we do lots of reminders on it because, you know, you think about your pocketbook and it's like you use this versus going to your doctor for colds, flus, or maybe you got a question like, hey, when do I take my child to the emergency room? I'm not sure. I don't want to be a hyper parent. You can talk to a doctor. You can video with them. Yes, I love this service. It's a time saver and it's a money saver on the employee's part as well as the county part, because this utilization doesn't go towards your Blue Cross policy, and every dollar that Blues pays gets taken into account at how they establish your renewal rates. So, you know, I encourage employees all day long when we talk to them, when they call in and talk to our patient advocates, we're reminding them. If they call in and they're asking about MRIs or CT scans, we remind them, let's price shop this out. We want to go to the lowest cost provider for that same service to keep costs down, because every dime counts.
Thank you.
You're welcome. Thank you. Yeah.
Alvin.
Commissioner Hope here. I'm wondering if at some point, I mean, consider adding this. Can we see a grid comparison of the plans we have now, along with a Simply Blue that includes all the co-pays and the costs and everything included in that? I'm kind of person, I like to see things on paper. So if we could see the plans we have now and this Simply Blue in a grid pattern that compares everything line for line.
And I'm gonna ask Nicole. Nicole, do you think the spreadsheet, and I'll kind of hold it up here, I know it's not going to do any justice, but do you think this spreadsheet would be helpful along with maybe the benefits at a glance?
I do. I do.
Okay.
Actually, I believe that I have the top of that on my screen. Melissa, are you able to share that, the PDF of the top comparison of the plans? It doesn't have cost share information on it, but it's on my computer and I can't figure out how to show it to the group, which is.
Yep, just one second.
I have too much stuff open. It happens. I do have the cost share. Screen share.
Melissa looks like she's got something.
Melissa's always got something going.
I'm on 2 separate. I can't log on to remote on my laptop.
Oh, that's right. That's right.
Screen here. I have it up on this screen, but it's not going to get on this one.
Let me see if I can close some other things. And if I show all windows. Oh, there it is. I just had to scroll down. Okay.
You got it.
There you go.
Little miracles. Small miracles every day on Zoom. This kind of, go ahead, Lisa, please.
Okay. I just wanted to, so the plan in the blue is what you're currently reimbursing, or excuse me, the plan in the blue is what you're currently purchasing from Blue Cross Blue Shield. And then the 3 gray plans next to it are your 3 HRA levels, which represent the end result to the employee. Then you've got option 1, that is the Simply Blue 4000. And so if the yellow highlights had come over in this, you'd have noticed that where it says 4,000/8,000, that's different from what you're purchasing because that deductible is a little bit lower. The 30% is different than the 20%. Next to the $30 on the chiropractic, the number 12 is different because with your current plan, it's 24. Then the out-of-pocket maximum, that's that 8150 and 16,300. That's just part of the Affordable Care Act, the out-of-pocket maximum, so that's a little bit higher. But you'll notice the 3 grade plans next to it. The only difference there is the 12 on the chiropractic on the 3 plans, and then the out-of-pocket maximum, which really isn't felt by any of the HRA participants, because the HRA is picking up on Plan A, 100% of the deductible and the coinsurance. Plan B, a single person's out-of-pocket liability is a $100 deductible, then 10% to an additional $500. So they're still at that $600 maximum on deductibles, and then they'll still have their flat co-payments on prescriptions and office visits. And then Plan C, their out-of-pocket maximum is a $500 deductible. Then they pay 20% of the bill to an additional $1,500 for an out-of-pocket responsibility of $2,000. So those haven't changed. So it's truly on the 30,000 foot view chiropractic, but then we know behind the scenes you've got those bullet points there on physical therapy, prenatal, emergency room, and referrals. But I can definitely send over the benefits at a glance if you'd like, which they're kind of like a 3 to 6 page summary of the purchase plan.
I would like that, yeah.
Okay, yep, I'll email those over to Nicole to send out.
Okay, and Melissa, hop in here if I get this wrong, please. The fiscal year, I've got the current cost shares that are happening right now. The 7.1% is Plan A. Right now, people in Plan B are paying about 5.1%, and our Plan C enrollees pay 0. What I recommended to finance in the draft budget was that we increase those to 10, 5, and 0. As you can see, especially if we make this move, there will be a big move potentially if we don't do anything with cost shares to the Plan A, which would be detrimental to our HRA piece. It would end up costing the county definitely more. I think if everyone moved to A, we need each employee needs to figure out for themselves what makes the most sense for coverage if they want to pay and cost share for that extra coverage. So with the current plan, if we increase the cost shares to 10, 5, and 0, that's where on that budget sheet I showed we would bring in an additional approximately $87,000 in revenue to the general fund for employee cost share. If we make this switch to Simply Blue and go to 10, 5, and 0, it would be a decrease from those premiums, not from the current premiums that people are paying here. It would be a decrease from the 10, 5, and 0, moving to that range of cost shares. I don't know, Lisa, if you can talk about any more, or if there's a need to talk about any more, why we need to right size those percentages.
Yep, you definitely, the way your current cost share structure is set up, it definitely steers them to Plan A, which is 100% coverage. Just because of the cost share, and then the steps between Plan A, B, and C is just not enough to drive someone to go, you know what, I'm willing to take on a deductible because I know I'm going to have deductible only when I utilize services in order to have less come out of my paycheck and employee cost shares. But the way it's structured, it doesn't make a lot of sense for most to do that. It's like, well, I'm going to buy it to the best because it's just a few more dollars out of pocket than if I take on deductible and reduce my cost share coming out of my paycheck. So definitely if you kind of realign what the payroll deduction is for those plans, it'll certainly help, because right now about 202 are enrolled in Plan A, 7 are enrolled in Plan B, and 9 are enrolled in Plan C. So you can definitely see, people are doing the math going, okay, I'm going to pay this amount in payroll deduction and I get 100% plan, or I'm going to pay this amount, but I'll take a responsibility and pay the deductible. And I think just overall, just steering to some, employee responsibility on deductibles when they utilize services.
And my apologies, I should have stated these are monthly amounts, of course. I think we all understood that. But.
Nicole, do you have the cost share screen, like the cost share that broken out? If that's something.
That's something I'd like to see at some point.
Okay.
I don't, do I have it right now? Is that what you're saying?
Yeah, I didn't know if if they wanted to see, I think in finance, they had mentioned wanting to see, what we currently pay, what the employees currently pay. And then if we, just stayed on the current plan and implemented the 1050, what it would be. And then if we went to Simply Blues and implemented the 1050, what that would be, just to kind of see a difference.
Is that not what I just showed?
No, it was still the same.
Oh, you should have said something.
Oh, I'm sorry. I didn't.
There you go. Current, yeah, there you
It's
go.
on my screen, so
There we go.
gosh. Thank you for speaking up, because I've been sitting here looking at it for quite some time.
Oh, I'm sorry.
So let me
I was a
back
little,
up and say
I was
all that
confused
again.
by that too.
Now with a picture, right? So our current plan here, these are monthly amounts, and this is what our employees are paying current plan.
Gotcha.
1% in A, 5.1% in B, 0% in C. These are monthly amounts. What I suggested was we go to 10, 5, and 0. This would gain general fund approximately $87,000 in revenue. You can see the increase to the employees. Obviously, plan A'ers are going to see more of the increase. That's exactly the conversation we just had with Lisa. If we kept the 10, 5, and 0 mentality to try and guide people to the correct plan that they themselves choose to be in, their cost share would actually go down if we move to the Simply Blues plan from what it would be if we went to the 10-5-0 in the current plan. And remember, we're doing this because there's a cost saving. So the overall cost of the county goes down, the overall cost of the employee goes down.
Yep.
But that does include this move to kind of right size it to more of a more adequate cost sharing. Yes.
Okay, and the 3 numbers there are single, 2-person, and family coverage.
That is correct.
Moving down. Okay, yep. That's what I wanted to see, is how it would affect. Thank you.
And these are dollars, even though there's not a dollar.
Yeah.
Yeah, we made a lot of assumptions on this, but
Yes.
monthly amounts, A, B, and C, single, 2-person, family.
So Jerry here, are we going to be getting this in an email to look at before we have to make the decision at the meeting? You were flicking through it and I was following it somewhat, but it'd be nice to get it again on paper.
Absolutely. I can send you out that big spreadsheet that we took little snippets from. I can send you that cost share information that I finally shared on my screen. That spreadsheet will have those 7 bullet points of what's actually changing. Lisa, can you think, or Melissa, either one, can you think of any other information that might be helpful for them to have?
Sounds like.
I think you covered a lot of ground there.
Yeah, let's get the stuff that you showed us to us, and then we can look at that, and then we had questions based off that. I think that's been trying to sit there and try to look.
That'll be great.
I have just a couple. Nicola, you finished or you got more to go with on this?
Oh, I think, and Lisa's probably gonna leave us unless anybody has any questions for her, too, so.
I just have a couple comments, not to the insurance part. So Lisa, I don't have any more questions on that. Just looking at, as the commissioners know, on our first report, we got the projected use of the fund balance was $2.4 million, 2.48 million. That's always high. Our first draft is, it's just kind of a guiding tool, like the bones, as we say, of the draft on the budget. The second budget takes it quite a bit down into almost $1 million, though, $922 if we don't do, $922,000 if we don't do anything. So I think doing nothing is, again, we've got some room to go. One of the statements of the adjustments to revenue we did in this last one is kind of going with Chairman Green was saying earlier, factored in $900,000 from the wind turbine under construction. So that's an unknown, but it's more than likely probable. We had another 300,000 that we could do if you wanted to put it down as a budget. Remember, budgets are a living, moving document. So we could justify if they're 100% complete, we could use that to balance our budget, even though that may be a fictional figure, or I shouldn't say fictitious figure, but it's kind of a question mark. I'm not too in favor of using the transfer in from the DTR fund yet. I still want to think about that. We've got some ongoing legal issues with that, even though we've been counseled that we possibly could do that. Nicole, I guess my first question is, we're taking 900,000 this time out of our fund balance. And we're going to take a little more out to balance with the incoming. Where are we sitting right now with our unrestricted fund balance? I know that's 2019. I think it was at 5.5 or 5.7. Where are we sitting right now with our fund balance?
Honestly, Commissioner, we won't know that until we end the current fiscal year. And if we looked, if we looked right now, I feel like we would have to totally estimate what our revenues and expenditures are going to be through September 30. I think the best we can do is go by the figure that Doug Dieter gave us. It was almost 5.8 million, 5.795 of unassigned fund balance. Okay. He also did mention the 3 million that's been assigned to things. I believe that.
Right. And I think we could take out from there if need be. It's not like it's not like it's restricted, or it's assigned but not restricted. I think we had a conversation, or do we have a board action or something, or a board understanding of that a while back in regards to what we can and cannot do and what's restricted and not restricted.
Yes. And he did note the assigned fund balance is not restricted by an outside source, meaning that the board can undo that assignment.
Just like I said, just a couple things. We factored in also to the wage adjustments that we just did was included in this round of the budgets. So even though we're going to be implementing some future things that got carried forward, at least that's my understanding. That we haven't done them yet, but we're going to do them, and they're in this one. Correct?
Correct. Yes.
Good.
They are both.
Again, you have to. Some of these are, we haven't talked about the elimination and the reduction of 4 to 6 positions. That's going to be a tough one. That's something no one wants to talk about. But we're looking at pulling 900,000 plus out of the fund balance. And again, that's something, everything, as we say, is on the table to try to get to this. And I'm looking forward to our next finance administration meeting. And as we go forward, one of the things Tobin and I had discussed, and I think commissioners in the past have discussed, being more involved, not just having 2 people in the finance administration committee be involved, because these are tough decisions. I mean, you're looking at dealing with people's healthcare, employees' healthcare. That's a major, major thing. And I think the 7 of us need to be heavily involved in getting the information and making good choices. Certainly encourage all the employees. I mean, if you have questions or you have concerns, obviously share them. Also to eliminating and reducing 4 to 6 positions. No one wants to hear that, especially in today's environment. again, we got some tough decisions to make going forward with this, but dropping from 2.4 million down to under $1 million. It seems that always happens, and we always seem to find some. So again, we had budgeted taken out of the fund balance, and I think in 19 that we just got presented, and we actually put some back in. So again, it's a living, and if you really wanted to get creative, and I don't like getting creative in numbers, you can do some other stuff too. So again, if you want to get risky and pull out of the DTR fund and pull out of the, not transfer out of the DTR fund and put that down, and also put down the 100% of the wind turbines, you're at 800,000, which leaves you at 122. Again, that's fairly risky. And that's more, I think that's more fictitious numbers and true numbers. So we got a lot of work to do between now and our final budget presentation, but we have to get the information and share it with people. So can any commissioners have, Nicole, are you finished, or am I?
No, I think you did a really great job, Commissioner Horton, of showing where we're at, where we started, and we kind of went up from the 2.5 to, I think, be 2.7-ish with the, including the Seagull Waters implementation for those departments not yet impacted. We have come a long way. Melissa and I have pulled up the bootstraps and climbed in that budget, and we've really been able to identify a lot of places we could either mostly decrease expenses, so it's a little bit of increasing revenues in areas too, of course, health. But yeah, options that we're looking at. But in most recent years, we have adopted the budget using fund balance to balance it. The budget's about 3/4 wages and benefits. And we've implemented a wage study to increase that. So you can't perpetuate that, right? You can't keep using fund balance to balance it going forward. So I think we do need to look at this.
Commissioner Jelezinski, I see your hand raised.
Thank you. As we look at our fund balance, the unassigned is what, 5.8. We are going to be looking at a motion at tonight's meeting to tap that for another close to $1 million for budget amendments this year. I do appreciate the fact that we need to maybe have more voices, more thoughts on the budget process, because it is a difficult decision, and it's going to impact the services of the county. In particular, I look at the eliminating or reducing 4 to 6 positions. That probably should be done under a kind of a hiring freeze, where positions, maybe they come up, people leave, you kind of review everyone. I've gone through 2 counties that have used that process, and it is an intensive review on that position, and sometimes positions get recombined and a savings potential is possible. But I think that should be done under a hiring freeze, where the final decision is the County Board of Commissioners after a very thorough review.
Okay, good comment. Commissioner Hope.
I just want to say I agree with Commissioner Jelezinski there. The only way I personally would be for, that last item, eliminating or reducing 4 to 6 positions, is if we could do that through attrition somehow.
Commissioner Swaney.
Yeah, I'd like us to also think about, we're willing to put on the table that, 4 to 6 positions, but I see that there's $250,000 in vehicles and equipment, and you could push that to $300,000 if you didn't do a gatehouse. And personally, I think people are more important than gatehouses. So that's a thought.
Well, the thing about the gatehouse, though, in that specific instance, Commissioner, is that was in the Parks and Recreation budget. So it's a separate budget from general fund. So in our general fund, adoption of our general fund budget, rearranging those in parks doesn't help the general fund, unfortunately.
Okay, well, it's really tough to, when it seems like we value vehicles and equipment more than our employees. And you know, and I understand there are different buckets, but we do what we can do. So I'm definitely not in favor of the 4 to 6, unless I guess we have attrition and those positions are not needed, because I don't think we should be forcing someone to take over 2 positions and pay them for 1.
Comment. Anybody of the commissioners have any further statements on this? Okay, hearing none at 6:09, I'm going to say I think that completes the work of the Finance and Administration Committee, sir, Mr. Chairman.
Thank you, gentlemen. It's after 6 o'clock. You folks just want to keep going? You're at home where you can get a bite to eat or something like that, and
Carrie Curtis is, oh, there she is. Her video's on. Carrie Curtis has the next item on the agenda, and I bet she's been waiting patiently.
let's move on. And the next item, let's go to Criminal Justice and County Affairs Committee.
I'll try to keep it short. Considering approving the fiscal year 2021 county child application in the amount of $1,674,630.82. Children under the jurisdiction of the Isabella County Circuit Court Family Division to child safety, well-being, permanency, rehabilitation of our most vulnerable population, and that the county board chair be authorized to sign the MDHHS 2091. This is something we need to be able to finance the care of children that are put into the care of DHS or the courts. And Carrie, why don't you pick up and tell about the changes, minor changes that we're looking at this year. I do want to say the report is because of the COVID-19, there's less expenditures this year. But even if that wasn't the case, I think DHSS and the courts do a fantastic job of managing the dollars, providing the care, but also having a positive impact on the fact that we're not paying out huge dollars like we used to.
Thank you. I hope you can hear me okay. I'm sitting in wind, so it's never very good here, signal wise. So
I'm good, Kurt.
great. So we're asking for essentially the exact same amount that we asked for and received last year. It's $20,000 less due to a budget item that is no longer available on the DHHS side. They weren't using that portion of transportation anyway, so it's not really going to affect how they do business or how the court does business. We didn't want to use this year as an example of what to ask for because of COVID. When everything was shut down, we couldn't put kids in placement. You know, policing wasn't the same. The kids weren't in school, so we didn't really have a great grasp on what was going on with them from the school's perspective. So we just didn't want to take the risk of reducing it significantly and then be in a situation where we had to come back and ask you for more money.
Are there any questions?
Yeah, Jerry, bring up the change in the reimbursement, the way that the state is reimbursing. Actually did something that really made a lot of sense, or it's going to help the county, is that we always had to pay the money and wait for the state to reimburse us at 50%. Now the state is actually picking up 100% of the costs, and then we'll get billed at 50%. So it really will help our cash flow a little bit. So big move. It'll help a lot.
Makes you wonder if the state would stomach waiting 8 months to 12 months for the county to pay them back.
So they definitely don't. They keep our money, as Melissa will be able to attest to. They simply don't give us any reimbursement whatsoever. They take theirs off the top. So like they made us, absolutely not.
Questions, any other? Then we'll move this on to tonight's meeting, and that, Mr. Chairman, completes the work of the Criminal Justice and County Affairs Committee.
Thank you very much, gentlemen.
Thank you.
There's no human resource or public works committee business, intergovernmental affairs or administrative controller issues. We have no unfinished business. Under new business, there's 5 motions from the unions in here. And basically it's to, if we receive it, get paid the $1,000 as a benefit for being in this COVID-19 thing that we're going through right now. Those will be on this evening's agenda, and basically we'll just move everyone and approve it and go down through those lines because the letter agreement with the unions that we have for this thing. Any questions on them? Moving on then, we're at the general public comment. Nicole, is anybody in the?
We've had a lot of people drop off, Mr. Chairman. So our non-video participants, Sheriff is still out there, Brenda's still out there, Steve Franovic, but I see no public in the meeting, sir.
There's nobody?
There is.
Nobody for general public comment. Any announcements?
Mr. Chairman?
Yes, Mr. Jalazinski.
I have been attending my township meetings again and been aware that MMR has been contacting the townships asking for support. But when I go to the township meetings, I also ask for the pluses and minuses dealing with the current service, the MMR service. And so I have visited 4 townships. I still have the village of Shepherd, and haven't found any of the governmental units in the south portion of the county. That may change with the village, but none of them have any serious MMR. They seem to be pretty satisfied with that. So I just wanted to bring that up. Also, I just want, as a reminder, and probably this is something for the finance committee. I know we talked earlier, there's a lot of controversy about commission travel and it kind of blew up and some really hurt feelings. I guess I don't want to see that get off the burner. I understand that we can't make a change until the new commissioner vote comes in possibly January when we do our bylaws, but I'd certainly like to see a modification to the current travel policy that, maybe offers a little more transparency and fairness to all the members, with the final decision being with the chairman of the board. I still see comments coming up that tells me there's still feelings out there that maybe we need to do something so we don't have this controversy in the future that we've had in the past. That's my announcements. Thank you.
Any other announcements? Let's move on to the closed session. Finally made it. I need a motion to go into closed session, please.
So moved, Jelazinski.
Support Horton.
It's been moved and supported to go into closed session. Madam Clerk, a roll call, please.
Commissioner Marino,
Yes.
Commissioner Swaney,
Yes.
Commissioner Hope,
Yes.
Commissioner Engler,
Yes.
Commissioner Jelzinski,
Yes.
Commissioner Horton,
Yes.
Commissioner Green.
Yes.
Number of votes is 7. The ayes are 7, nays are 0. Motion passed, Mr. Chairman.
Okay. Nicole, are we secure?
No, sir, you are not. Not until I say, I am moving you into breakout rooms now.
We have to wait till we get secure, fellow commissioners.
You need to click, can you click join? Yes.
Are you going into closed session? Okay, I'm not sure why this is doing this. Ah. Is that you, Nicole? Oh.
I'm muted.
You're muted. That's why.
I'm an expert at this stuff. I can
You
tell
got
that
it.
right now.
You're doing great.
Is there a motion to adjourn, please?
So move Jelazinski.
Support Sweeney.
All in favor?
Aye.
We are adjourned.
See you soon. You'll
In
all
about
have to
7
leave
minutes, we got to go back to work, gentlemen.
and join me on the-
Okay.
I gotta go use the restroom, so there you go, so.
Quickly, yes.